This is going to be the era of nonstop stimulus and how are both gold markets and cryptocurrency markets adapting to this new era. I mean, we had a 10-year bull market ahead of Corona that was driven in a large amount by quantitative easing, and there we're talking hundreds of billions of dollars of stimulus. This year we've seen multi-trillion dollars of stimulus, and we might see more. So there's been dollar weakness, there's been strength in gold markets, we've seen both sell-offs and rallies in cryptocurrencies. So this is a pretty deep and interesting topic here. So I'm going to ask Christine Sandler to unmute. Christine is head of digital assets at Fidelity, and she's going to be our discussion leader for this panel. So Christine, take it away.
Yeah, thanks, James. Great to be part of this group again. Look, panelists, I think this is an opportune time for us to think about and discuss the role of alternatives and amid global macro conditions. But before we do that, do you mind quickly introducing yourselves? Matt, we'll start with you.
Yeah, great. Thanks, Christine. I'm Matt Fox. I've been working for the last about 2 or 3 years with Titan Advisors, about a 20 to 25-year-old independently owned asset management firm on diligencing the cryptocurrency space writ large. That's been through, the hundreds of cryptocurrency hedge funds that have sprouted up, through, specific asset level investments, diligencing the all the service providers. I know Christine obviously is the expert on, and going through the intricacies on the operational side, from custody to fund administration, all the different issues that brings up. And we're still actively evaluating the space, not in a rush to do anything, but we are, have been very actively monitoring the space for a few years at this point.
That's great. James?
Hi guys, I'm James Gowell, the head PM of the Vulcan Metals Fund for Typhon Capital Management. I've been trading metals since 1987, so I guess you brought me in as the gold guy here, but I also have a deep interest in the digital world as well. I like to keep myself young and on top of things. My background is mostly in my early days trading copper, and I moved into trading precious metals along with that over the last 15 years or so. Yeah, looking forward to the discussion on this.
Great, and finally, George.
Hi, yes, George Michaelopoulos. I trade the crypto book here at Typhon, as well as the macro and energy strategies. But prior, I have been trading sort of in my own PA, the crypto, since 2012 when I first got into Bitcoin, and was a portfolio manager at Citadel for 6 years, director running the crude derivatives discretionary book.
Great. All right, folks, first question. We've seen $3 trillion worth of stimulus. How has that affected the dollar, Bitcoin, and the positioning within your portfolios? We'll start with you, Matt.
Great. Yeah. So I think the first thing that you'll see is you've seen volatility in the U.S. dollar, right? In the last year, you've seen it hit the highs and lows of the 3 to 5 year range. I think as that pertains, I'm going to focus mainly on Bitcoin. I think, with some gold also, but I think that specifically the volatility or the weakness, you could call it, in the U.S. dollar kind of raises the specter of, is there going to be a large inflationary event? Are you going to see commodities start to gain somewhat of a monetary premium? And I think that, so I think, the $3 trillion of aid, and I think the signaled willingness for that to continue both on the fiscal and monetary side, I think is starting to raise these questions about long-term financial planning, and, whether you're going to see other forms of commodities, again, try to start to absorb monetary premiums. Our view is that Bitcoin is very well positioned to do that for a lot of fundamental reasons, and, happy to discuss that kind of as we get going.
James, I'm tapping you next. Bitcoin as a role in your portfolio, but more in a relative sense, how is the impact of the stimulus had with respect to the portfolio?
My Bitcoin ownership is strictly on a personal level. I do not manage any crypto for Typhon. That's George. I do manage the gold book though for Typhon. And my phone's ringing. We're coming up to a copper close. Sorry about that. Hang on one sec.
You're among friends,
Can't
James.
talk, buddy. I can't talk. All right, Matt. Sorry about that. I have to execute some orders here. Apologies. So regarding gold, we've been 85 to 90% of our book is spread trading. So we've run more of a long spread position during this. Now, the reasons for this is multifaceted. Number one, we've seen banks standing down on what essentially is interest rate plays in the 1 month to another contango markets, right? These huge open interest has created availability of positions that we really previously have not had. So what we're looking to do is maximize our upside potential with these interest rate plays in the gold market that haven't been available. Now these markets, the high open interest and high speculative open interest is brought on by increased open interest, increased speculative open interest, which is very important to the flow of the market, how we trade our book.
Great. Well, we'll let James do some copper trading.
Yeah.
And George, the role of Bitcoin and the role of crypto or digital assets in the portfolio relative to kind of what's happened with respect to the stimulus as well.
Yeah, so it's a question to me of if the tail's wagging the dog when it comes to inflation. And I'm sympathetic, obviously, to the long-term macro story that indefinite fiscal, in particular fiscal, and monetary stimulus, especially financed by government debt, is going to ultimately be inflationary at some point. That said, we've heard this story before, and we heard it after 2008, and it was, and myself included, were obviously proven quite wrong. So why is this time different? I think there's actually a good answer to that. But I think we are getting a little bit ahead of ourselves, or the market rather is getting a little bit ahead of itself in terms of its confidence in projecting that inflation. So number one, we are, due to this shock and in the current environment, in actually a deflationary, fundamentally, spiral. So the inflationary worry comes from, I think, two things. One, asset price inflation, which we've seen go to all-time highs. Two, you'd have seen strength in gold and weakness in the dollar. But one wonders if that isn't, again, talking about the tail wagging the dog, just a reflection of the investor narrative positioning for something it sees to be the future and isn't actually present in the data. And so I am of the mind that we are far away from actually seeing core, really elements of inflation with some caveats. And so we need to be careful that, of feeling a false sense of security in these assets, gold and crypto in particular. That said, if and when I think we kind of catch back to reality and there's a correction, I see it as a long-term opportunity to be positioned in crypto in particular. Gold to me, to a somewhat lesser extent, just because I find it to be less asymmetrical as a trade opportunity to protect uniquely from a fast debasement of the dollar should we ever actually get to that point, and not just in a narrative boy who cried wolf sense like we did last time.
Good. Look, I think that's a great point, George. Would like to dig into that a little bit more with each one of you. And share your thoughts. I think the public company CEO has been pretty outspoken about allocating to digital assets in favor of the US dollar. I think there are some elements that George kind of raised that where he believes Bitcoin specifically is a potential, provides potential upside. and more importantly, downside protection as well. Can we talk a little bit about Bitcoin? Is Bitcoin kind of the new gold? Is it a better gold? And what are the elements that make it a better gold? And what are the elements where, what are the attributes where it falls short? James, since you are not a Bitcoin, take the contra.
Right. Okay. This is how a lot of people, you people here, you're in the business, people ask your opinion on these things. And this is what I like to say about gold. Gold over the years has followed many different things, right? Over the years, it was euro. It was Swissy. It was money supply. I don't know, if anybody actually remembers when that was an important number back in the day. So we have all these numbers that gold has followed over the years, right? And gold essentially around 7,000 years. But when you're investing in gold, it's a leap of faith, right? Think about it. When you get down to the basics of it, you don't want to get caught up with the Warren Buffett that it doesn't give value, it doesn't have value. Okay. But ultimately, it's a leap of faith that the price of gold is going to go higher. Now, over all these years that it's been a tradable commodity, it's tied itself to different things. The dollar, which naturally makes sense, is pricing and it's cheaper and et cetera, et cetera. But it's also tied itself to various other things over the years as protection against war, protection against any sort of global event, okay? Now, think about your people that were gold bugs, right? Because essentially, the one thing I find very similar with gold people and crypto people is they are very passionate, right? It becomes almost a state of religion to them, where it's such a deeply embedded thing. Now, as I said before, gold is such a leap of faith, I feel. Now, it's been around for 7,000 years, and it's been trading as a commodity for, hundreds and hundreds of years. Okay. It remains a leap of faith. Now, Bitcoin, which has been around much less, do you really think in our lifetime we're going to be able to tie Bitcoin to any particular assets as moving up or down? That's always my question, right? We really haven't figured this out on gold in 7,000 years, right? Where is Bitcoin? Is this not going to happen for our lifetime, right? Is this something that, yeah, it's an investment and I'm a buyer of it and I'm a believer in it, right? But it's essentially a leap of faith, right? It's okay. And someone was saying to me, well, they were coming to me, well, how do I bike it? Well, you do it on your phone, you do it on your computer, and people are looking at you like really? I say, yeah, this is the real world now. So it's become the ultimate leap of faith. I'm a buyer, I'm a believer, as George says, from a trading point of view. I mean, there's going to be ups and downs, right? But I believe what's going to happen with Bitcoin, it's going to start tying itself to more elements in the world economy, right? So that's kind of my brief overview of how they tie in together.
I think that's a great point. I think from some of the things that we see is that there's, the desire for more uncorrelated assets, of which gold and Bitcoin kind of fall into that bucket. Matt, do you want to talk a little bit about your due diligence around Bitcoin and how it potentially fits into the portfolio, and if other institutions are kind of rallying behind this, from rallying behind this narrative of kind of Bitcoin as a digital gold?
Yeah, definitely. So I think I think in the first instance, I think James, hit the nail on the head in terms of, I think Bitcoin is similar to gold in that you're trying to value something that doesn't generate any cash flow, right? Doesn't generate any income. So how, there is a religious seal to it. And it's also, how to decide when is a good time to buy if you can't price something based off of cash flow. So I think you see a lot of those parallels. And so I think if you're the type of person or the type of investor that does not understand the appeal of gold, is an anti-gold bug, then you're probably not going to see the appeal of Bitcoin. So I think it's very similar in that regard. In terms of institutional, and I think to James's point about narratives driving, price action in Bitcoin, I think one of the dominant narratives over the last 3 years has been the wave of institutional capital coming into the Bitcoin space. And I think that that has run in that there are a lot of nuances that have made that not such a seamless transition. I think one of the big pieces has been, Christine, what you all have been working on at Fidelity, which is on making it more seamless for investors to get exposure to the asset. And the main one of those is custody. I think you can analogize holding Bitcoin to holding a password, basically, right? So it's a digital bearer asset. You have a whole new level of administrative and regulatory difficulties. I think that those have largely, over the last few years, have largely been met by institutions. I think one of the kind of the catch-22s that you have is a lot of the, when you ask, is Bitcoin the new gold? I think it's like gold in that the narratives are similar. It's also like gold in the way that, the iPhone was the next cell phone, right? Well, yes, it was, but it also had certain fundamental properties that kind of raised the potential of it. And so I think the interesting thing on institutions is that a lot of those properties, in terms of being much easier to store, much easier to send, much easier to divide, much easier to validate, the legitimacy of the incoming either Bitcoin versus gold. A lot of those are not kind of go out the window when you talk about institutional holders holding it, because they're opting out of all of that, and they're having a third party doing all of that work as well. So I think, to James's point, I think it is a gradual shift. I think it's a gradual then all at once shift. I think that Bitcoin, unlike I think Bitcoin has a consistency to it in terms of its issuance rate, in terms of its ability to verify, in terms of knowing that the fundamentals of the system are not going to be changing at any time. I think that there's a consistency to that will lend itself well to some sort of a scare over the dollar. As George said, that might, this might be a head fake here, but I think, when that comes, I think Bitcoin is positioned very well. I think that it's the kind of the challenge, Christine, of institutional investment advisors and fund managers to find not just regulatory acceptable, but I think it's going to have to be a nuanced and thoughtful approach to really kind of allow institutional investors to get exposure to Bitcoin while also taking advantage of some of the nuanced custody aspects and nuanced attributes that Bitcoin provides. I think that will be, largely where the success or failure is found.
Very well put, Matt. George, as an investor in digital assets, aside Bitcoin and others, can we talk a little bit about some of the inherent attributes, whether it's network, whether you view volatility or the volatility of the underlying asset to be kind of a feature or a bug, and potentially also something that Bitcoin has that maybe gold lacks, which is kind of that upside, that potential upside, and access to the venture piece, or so the venture discussion around Bitcoin's inherent value.
Yeah, so sorry, just the main focus of the question is just the differentiating factors in terms of relative to gold, or
yeah.
sorry.
So if we're talking about is Bitcoin a better gold, are there other attributes that we should be considering, whether it's the fact that it's
I think
divisible. Yeah.
I think Matt actually covered a lot of the ones that I'd go over, which is, again, it's about storage, portability, fungibility, scarcity, it's more scarce and quote unquote harder money than gold or any other physical asset, because there's no price point at which you can incentivize a greater than projected supply curve. These are its main features. There's an argument that the storage, while less expensive, is not necessarily easier, because you bring a whole bunch of security risks to the fray that you can delegate to third parties, but then you're back to where you are kind of with gold. Luckily, the marginal cost for those third parties of doing that, if they know what they're doing, is less inherently, so it still has those advantages. But to the sub-question you had about volatility, at this stage, I have to argue that it is most certainly, in my mind, a feature, because given that it is a digital, if you want to be, I don't mean to be derisive, but to take the term from gold, pet rock, and that it doesn't do anything or yield anything in non-abstract sense, then you need to be able to get some sort of utility from it to incentivize people's participation into the network, to build the network value of which Bitcoin is still the undisputed king. And that is going to be making people rich quickly, and that's what it's been so far. And that's been mostly unidirectional volatility over the course of its life. But as it's maturing and those prices are getting loftier and loftier, and that market cap is growing into the billions instead of just being a micro cap, it's more and more two directional. And so there's a lot of money to be made in both directions. And that's going to be important to bring in, whether it's the institutional money, other financial players that need a reason to go from, even if it's just gold or any other kind of financial asset to allocate to. So right now, I would say not only is it a feature, it might be in a real non-narrative, non-abstract sense, the only, there's maybe one other use case, which is black market, right? But those two are really the only hard use cases that don't depend on your imagination today to give you value as a user of this class. So that's Bitcoin and all the alts and all that. So I'm not sure if that answers your question, but
No, definitely. I think the key piece there was volatility as a feature or a bug, and I think you absolutely addressed that. One more question about Bitcoin, and then we'll move on to a slightly broader topic. The fixed supply, the 21 million Bitcoin. Look, that's something that really does resonate with, resonates consistently, that fixed supply, uncorrelated nature of the asset. Is the fixed supply potentially compromised by, or the concept of fixed supply compromised by the fact that there are thousands of other digital assets, number one? Number two, that potentially forks can occur. And what is the perception there that is that truly a cap? And do you believe it to be of value?
Well, I'll take a stab at that. But yeah, in my mind, the argument that you can clone, whether it's just a straight clone with small modifications, like let's say Bitcoin Cash, or whether it's an alternative like Ethereum, which is fundamentally different at its core in terms of the technology, that is not dilutive to the fixed supply argument in my mind, any more than having many different types of metals that may or may not be yellow is dilutive to gold's value. And that's because while you can create something similar, it's very easy to verify the difference between one and the other, regardless of whether one is a cut paste in terms of code of Bitcoin or any of the other alternatives. So, and because you can verify it, and because the value relies on essentially mutual agreement network effects, you can retain the value of those networks within the network insofar as you can differentiate one from the other. So the idea that the supply curves are additive and somehow is not accurate. The one caveat, though, is that I would say that from a price performance perspective as a trade, they are dilutive. So intellectually, as a digital gold, I don't buy the argument that one dilutes from the other. But from a price appreciation perspective, it does, because any new capital flowing into the space will be now competing and dilutive one to the other in terms of marginal purchase. So no intellectually on supply addition, but yes, from price performance dilutive to new money perspective.
Matt, anything to add with respect to the fixed supply nature?
Nope.
Okay.
I think that's he hit the nail on the head there.
Agreed. All right. Let's tack slightly, because we're coming close to, we've got about 10 minutes left. Gentlemen, do we think that there will be additional stimulus? And what's the effect of the additional stimulus, obviously, on both of these assets, and specifically, and the dollar as well? We'll start with you, James.
Just going back a little history of gold on trading on COMEX, 1980, just to give you a brief overview, huge run up in the gold and silver markets. Okay, I had come down to trade commodities in 1982, so it was kind of like a legendary urban legend. Like people spoke of these moves like $800 gold, like it was the craziest, it was crazy of the time, craziest price move ever. The thing that I always am amazed about, speaking to a lot of the people that made money being long gold, interest rates at that time, 15%. There were guys who were making money in gold at the time, and they were putting it in 20%, vehicles. And it's just amazing to me how the entire structure of our economy has changed, right? With the zero interest rate environment. Now, where did that run up in gold lie? What were you, when we look at it back from our time now, like what were you thinking? Why were you even buying gold? Why weren't you just sitting in a 20% probably non-taxable vehicle if you hunted around back in those days, right? So I always look at these things back in a prism of how exactly they fit in during that particular time. More stimulus, I think it's 50-50 for gold. I think it's 50-50 for gold. I think at this point, gold is riding on its own separate wave, right? As we saw in the beginning of the coronavirus, when everything was correlated to zero essentially, right? And you think about all these gold bugs that have been waiting around, waiting for years and years and years. Please let something terrible happen to the world. So and then gold sells off $300 or whatever it did. And then the Bitcoin people, the same thing, hitting those lows, right? So I think we're hitting a new period where just stimulus and things like that aren't really going to matter. I think it becomes more a matter of public perception at the time, as George speaks about, with Bitcoin being the leader, but there are others out there, right? And just a little background on myself, and this is such a fast changing game. When I first bought my Bitcoin through a dealer probably about 5 years ago, I said to them, well, I'd like to buy some Ethereum. I'm hearing something about Ethereum, and it was about $14 then. He said, well, we don't even deal in that yet. So the everything has become such a fast moving situation that I'm not sure stimulus is really going to matter as much as public perception of these things. So I'll pass it on to the rest of the guys, see what they think.
Matt? Oh, George is unmuted. He beat you to it.
No, Matt, please go ahead. I'll go after you.
No, go ahead, George.
Again, I guess this is a super interesting question to me in general, in terms of, because I think the market focus and attention is on it right now. And that to me is more a presentation of a trading opportunity to sort of fade the asymmetry in perception, even though long term, I do think that the effect, if it really boils down to fiscal in particular, first of all, differentiated from monetary. Monetary, it turns out, we've learned, isn't nearly as stimulative or inflationary as we thought it was. That's the lesson from the last decade. And fiscal, now we're potentially embarking on the beginning of almost a de facto UBI type of situation with enhanced unemployment if it can get re-upped. And let's say the Democrats end up taking the Senate and the White House and are able to basically perpetuate that for an indefinite period of time, ostensibly in the beginning, because we want to bail out the present crisis and get employment back to where we need it to be, and all those sorts of things. But I think it'll be quite difficult to remove, just the way that QE was more difficult, but even harder politically now, because it's really money in people's pockets. And the economy can become much more dependent on that than sort of the monetary psychological game, which was much less actually concretely affecting people's bottom lines than maybe I think most realize. So if we get that version of history, which is not a slam dunk, but is certainly a significant probability, then to me it's clear that we have very long-term implications for this asset class. And I would be massively bullish in a secular sense the space, and in particular on the digital gold aspects, of which Bitcoin is most definitely king. Sorry, that was a little bit of a rant, but
No, it's good. No, it's all good. Matt,
Yeah, I can just go ahead. Yeah, so I agree with the comments before me. I think that ultimately the question is, is the upcoming fiscal and monetary action on the horizon, is that going to increase or decrease, kind of to James's point about it being a religion or a belief, is it going to increase or decrease the belief in Bitcoin, right? My view is that it will serve as a very helpful foil, in the same way that it will for the gold bugs. The Bitcoin bugs will, see it and will be stomping their feet and waving, look, our supply, increases at a set rate almost every 10 minutes. The supply schedule, you can store it how you want. It's not going to be debased. I think you'll see very parallel arguments there. I think in terms of also much of the, I think, you'll see on that end, I think it'll also be interesting to see the extent to which the US dollar's role as the global reserve currency will be challenged. I think that will have strong implications for both gold and Bitcoin. I think the way I think of Bitcoin is it is an asymmetric bet that it will start to act more like gold, right? So I think it's not there yet. I think both the volatility and the price reflect that. I think if we're in a world where gold, the market has shown that Bitcoin is the new gold, I think that the price of Bitcoin should be, orders of magnitude higher, and the volatility should be much lower. And I think that it's looking at the trends. I think politically, in terms of, is there going to be more intervention? I think there's not, at least in the United States, there's not much reason to think that the trend towards more intervention and more debt is going to stop anytime soon. So I think, it's again, to both of the other speakers' points, I think, it's almost certain that the relationship won't be linear. But I think if you zoom out and you look at it over a long enough time frame, I think that it is kind of a secular trend that is both, at least in Bitcoin's case, also provides an asymmetric opportunity, in terms of having high upside, but also potentially being somewhat defensive, which is, I think, very rare.
that's great, guys. Look, we really didn't talk about this on a global stage. I mean, but we did also receive one question from the audience. So if you're prepared, on the topic of Bitcoin tying to a world event, any observation on Bitcoin versus the Turkish lira? Perhaps people in Turkey are trying to move their cash away from lira. We've had some waves of lira depreciating against the US dollar and the euro. Were there corresponding jumps in Bitcoin? And then you can also potentially replace Turkey with certain Latin American countries, or those with potentially unstable currencies. George, Matt, would you like to weigh in on that concept?
Yeah, so I'm not sure if that's a plant question, but I think, yeah, Bitcoin is at all-time highs relative to the lira and relative to the Argentinian peso, I believe. So there, I think you definitely are seeing that. I think that is certainly validation. I think in terms of the comments earlier about the dollar's status as the reserve currency, I think there's a related concept of, as you start to see more capital controls being implemented, and as you start to see monetary policy and regulation around money and spending money being used as increasingly politically, both within countries and between countries, I think that is, again, a bullish secular trend for both Bitcoin and gold.
Indeed. Gentlemen, we are just about out of time. Any final comments? That's great. Wanted to thank you all for your time. Have a great day.
Thanks,
Great.
Christine.
Thanks, Christine.
Thanks.